Hi everyone, I'm Melisande Mual, publisher at The Papers, and I'm at MPE Berlin. And joining me today is Brice van der Walle, EVP Core Payments at Mastercard, and we will dive into the topic of tokenization and the future of a tokenized world. So really good to see you, Brice. How are you today?
Very well, thank you. Good morning.
Lovely, good morning. So last year, we've all seen that Mastercard announced its vision to achieve 100% e-commerce tokenization in Europe by the end of the decade.
Yes.
Can you walk us through what tokenization entails and how different stakeholders in the value chain of payments stand to benefit from it?
Right. So I think the reason why we introduced tokenization originally in the digital world was because we wanted to replicate a little bit the chip and pin experience that we have in the physical world, where the 3DS was originally, or could be compared to the pin, right? Inserting something that only you know. But if you think about it, we didn't really introduce the chip concept in the digital world, right? You would just enter your 16-digit PAN number, and that's it. Actually leaving sensitive financial account data on the internet, right? And so tokenization is actually an attempt to go about it and make sure that we don't leave any sensitive financial account data in the internet anymore. And so we've been, of course, talking about tokenization. The industry has been talking about tokenization for quite a while, but it was not an end-to-end tokenization, right?
No.
It was just making sure merchant, PSPs, gateways were PCI compliant, and in case there would be something wrong happening, your credential would not be cracked on the merchant or the PSP side. But having still clear credentials from the consumer floating from the PSPs to the issuers was an issue, right? And so that's what we're actually trying to solve for by having end-to-end encrypted, tokenized credentials all over the network. So to your question, what do the industry players, what do the stakeholders need to do? They have to also enable it, right? So it means acquirers, issuers, and of course, their respective processors need to do the work so that they can also get the data encrypted and decrypted whenever they need to process the transaction.
Yeah, and how will all stakeholders in the value chain benefit from it? Because it basically means that we do not have to enter our PAN anymore. So no more numbers being entered by the consumer. But how does everyone benefit from it?
Yeah. So first point is obviously security, right? Because you're drastically reducing the fraud level because you just don't have any credential you can use to perform a fraud. So fraudsters are unhappy, but our merchants, our acquirers, our issuers, they're all happy. So they benefit from reduced fraud. That's point number one. The other additional benefit, which is key, is the approval rates go much higher. Why? Because issuers trust token, end-to-end token, much more than just regular credentials that they receive in their authorization message. So that actually allows them to approve more transactions on the network than they used to in the past. And on average, we've seen that you have an approval rate improvement of about 6%. So that's massive, right? So merchants, obviously, who are concerned about making sure that every transaction gets approved, right? They really see tokenization as a massive way to improve their approval rates overall.
So that's, for instance, with the click-to-pay offering.
So click-to-pay will be, let's say, first of all, click-to-pay is an ISO standard, right? So it's something that the whole industry is bringing together to improve the user experience, where basically you store through tokenization the credentials of the users, and you're able to recall those credentials whenever you want to do a transaction at your preferred merchant in the future without having you to retype all these credentials anymore. So you're speeding up, if you like, the checkout process. So click-to-pay is really about creating the best user experience because you don't have to re-enter your credentials. And it's leveraging the tokenization of the credentials to, again, provide better security and remove the friction and ensure you have higher approval rates. So win-win-win.
Win-win-win, definitely. And how about passkeys? Because they are being positioned as a key enabler of smoother, more secure payment experiences. And how exactly are they improving the payment journey, and what makes them a better alternative to traditional authentication methods?
So the way I like to explain it is, it's like you have tracks for a train, right? Two rail tracks. You have the authentication rail tracks, and then you have the approval rails, right? And so if you think about it, today with 3DS, you're actually going for the authentication. You're actually going on a different track, a different rail track to ask the issuers and the directory server, hey, could you please authenticate that person for me just to make sure that she's who she's pretending to be. Challenge with that is usually that separate track is on another device, or it's a separate process that you as a consumer or as a merchant might not be familiar. So you create friction, right? What you do with passkeys is you actually bring everything back to the same track, meaning you're using the embedded biometric capabilities of the device that you're using to check out, right? So let's say you're doing a transaction on your mobile. Today you could be asked to check in, to do an authentication into a separate app while you're browsing on your favorite merchant app to do the shopping. And suddenly you need to go into your bank app, which is a separate track, to do the authentication. And that's where you lose people, right? And that's a good scenario, I would say. If you're on your computer and then suddenly you need to use your phone to do the authentication, God knows where your phone is. So, so again, you're losing people. Now, by using passkeys, you're actually always staying on the same device. You will use the biometric capabilities, facial recognition, fingerprint, that is on the device that you're actually using for the checkout, right? So you're basically avoiding that you go on a separate track for the authentication. It's all in one. So that should be benefiting everybody again.
Absolutely. Less friction, less drop-offs. Cool. So, but it's 2025 now.
Yes.
And 2030 is basically around the corner. What are the main areas in the ecosystem that still needs to be addressed to make this 100% tokenization goal achievable?
Look, overall, we have now about more than 30% of all card-not-present transactions that are already tokenized. So we have most of the issuers, most of the acquirers, let's say, ready. We see that on what we call a secure card on file. So when you have registered and stored your data credentials at a merchant, usually tokenization is already happening. Where we don't see tokenization enough today is on the guest checkout, right? So this is where you, for many reasons, you as a consumer, you don't want to store your credentials at that particular merchant. Could be a question of trust, could be because it's the first time you go there, could be anything, right? And this is where we want, of course, the industry to go and push tokenization. So we're calling on the acquirers, on the PSPs, on the gateways, and obviously on the merchant to make sure that they also enable tokenization for those use cases, namely with click-to-pay. Because, again, that's where the main big pain points about security and user experience remains today. So that's what we have to do between 2025 and 2030. Okay,
still ambitious roadmap, I guess. But thank you so much, Brice, for your insights into the future of tokenization.
Thank you very much. It was a pleasure. Thank you.